under a rock, which most of you haven't. You're probably watching the news and you are aware that Iran is having a complete meltdown and crisis over there, a change in regime, there's instability in the region, and we have a lot of geopolitical things going on with the US and Venezuela and China and Russia. All of these things culminating in a way that could and likely will rise the cost of oil globally, but mostly coming out of the Middle East. The chart that I'm watching closest is the Japanese yen versus oil. The escalating events are going to raise the price there. I don't know if that's going to be from them shutting down the Strait of Hormuz, or if oil is going to get shut down, or, they blow up factories or refineries. I don't know what's going to happen. My anticipation is that we are going to see the spike in oil, and that is going to be the straw that breaks the camel's back for the reverse carry trade. If we see a 20, 30, 40% spike in oil in a very short period of time, which we've already seen a 5% rise here in the last couple of days, this is going to have significant effects on Japan. There's going to be inflation, there's going to be currency risk, and they're going to have to raise their interest rates. This is not just a spark, it is a fire that's going to happen. Japan's import costs on their energy is going to go up substantially, and higher costs are going to be felt across their entire economy. They already have significant inflation. This is just going to exacerbate that situation. And it's also going to cause the Japanese yen to become weaker in the global scheme of things. The only way that the Bank of Japan is going to be able to combat that is they're going to have to raise interest rates. And that's where the reverse carry trade is going to become compromised. Over the last 3 decades, we've had trillions, tens of trillions of dollars borrowed in yen. And that money was taken and invested. It's in treasuries, it's in stocks, it's in private credit, it's in gold, and it's in crypto. Whatever you can think of, it's tens of trillions of dollars. It's not going to matter where you have your money. There's going to be a liquidity crisis that sucks liquidity out of that investment. And that only stays working as long as Japan's interest rates stay low. We've already seen their bond rates rise to the highest that they've been in 3 decades across every single one of their bonds. So the 1 year, the 2 year, the 5 year, the 10 year, the 20 year, the 30 year, the 40 year, doesn't matter. Some of them are at the highest amount that they've ever been. And right now, people are already getting margin called, but they believe that they're going to be able to, slowly issue their way out of this. If there is an event that occurs that is not on the roadmap, that's outside of what they believe, you're going to see a rush for the door. And that is going to happen when the Bank of Japan has to aggressively raise interest rates on the other side of oil spiking. Borrowing yen gets very expensive in this situation, and the carry trade stops working. Positions must be closed. And this is mechanical. It's not emotional.
Good morning, everybody. Hello, and welcome back to another episode of your favorite crypto news related channel. And today is a very interesting episode. As you guys can tell from the title of today's show, an XRP ledger validator goes down in Japan. It is SBI's validator we are going to be talking about today. So is there an upgrade process going on in the background? That's why I wanted to start off today's show with a little bit of Jake's analysis. We do already have over 1,300 live listeners here joining us. If you're excited and you enjoy this content, show us some love, smash that like button. If you're wondering what the heck is happening in the crypto markets, we're going to work to answer those questions today, showing you guys what's causing this collapse and is a bottom in, not just for XRP, but for the digital asset space at large. We're going to be addressing many of those questions and concerns. Now, I do want to give a big shout out to Eric, smash the like button 4870. He said, go Seahawks. Sorry, not sorry, abs. Hit the like button. Now, shout out to you, Eric. Thank you very much. But I got to say, remember 2014, my friend. That's all I got to say to those Seattle fans out there. And of course, hopefully everybody had a great weekend. There was record amounts of snow here in Boston, Massachusetts. We're looking at about 20, 22 inches of snow sitting outside my window. The blessing that has been bestowed upon us, the Wi-Fi did not go out the entire storm. And that's why we're sitting here live on Monday morning, breaking down a little bit of crypto analysis. And I do want to give a shout out to the Puerto Rico right here, 1970s legend. He said, live from Puerto Rico, let's go XRP. Massive thank you for the $49.99. And trust me, guys, this is going to be a very interesting episode. Now, as you guys know, we use retail as a sentiment indicator. What are we looking at in the space? Is a market level, are these levels undervalued or are they overvalued in this current environment? One thing is very clear. For retail investors, they're leaving by the thousands. And that's why I wanted to start off today's episode by highlighting the oil spike, what's happening in Japan, and how the United States is set to vote on a crypto bill this Thursday. Now, originally, I had titled the episode, they were going to vote tomorrow, but in the last 60 minutes, the Senate came out and gave an official update. The Senate Agriculture Committee has rescheduled its crypto markup to start on Thursday, January 29th. This is due to the extreme weather circumstances that took place over the weekend. And I do just want to say, I hope everybody's staying safe, staying warm, and hopefully you got a day off of work where you can enjoy some time with family and enjoy some crypto content as well. But I want to hear from you guys. Do you believe the Senate Agriculture Committee will get the crypto bill passed in Q1? Now, this is not the Clarity Act. This is something different, but it's going to provide clear rules and guidelines for the digital asset space. And as you guys can tell, the Clarity Act has clearly turned into a separate issue where you have the Democrats on one side, you have the Republicans on the other. They're using ICE funding as a way to not pass the crypto bill. There's all these sort of political nuances that are taking place. But what do we know for sure? If crypto clarity is passed in any way, shape, or form, whether it's from the Senate Banking Committee or the Senate Agriculture Committee, that is the catalyst that we need to get this thing up and moving. And by this thing, I do mean the digital asset space. I do want to give a big thank you to Seven Dennis out there for the $2 dono. SBI Validator signature indicates down on purpose. And what is he talking about? SBI going through the process of upgrading their banking system and shutting down the XRPL validator in the process. Now, our listeners probably want that news, so I'll dive right into it at the beginning of the show. Then we'll get into the Japan rate hikes as Japan's bond yields have just reached a 30-year high. Now, again, we all remember the price predictions, the euphoria that we anticipated in late December for the XRP community. Obviously, it didn't happen, right? But what we do know is that there are huge catalysts that did not occur, which means a spike in oil, an increase in the Japanese bonds, and a massive recall of the Japanese debt that has been issued over the last 30 years. Those catalysts could still take place, and that could move this market to a place where we finally are appreciative of the fact that we're able to take crypto gains once again. There are thousands of new listeners just finding themselves in the Good Evening Crypto community, and they're sitting there wondering, when am I going to take profit? When are we going to see some new all-time highs? Well, we're going to cover some of those catalysts. I do want to kick off today's episode starting off right here. As you read correctly, an XRP ledger validator went down in Japan, and Bank XRP at the bottom of the screen said, "What are you updating, SBI?" Well, here's the response. It seems like Ripple partner SBI is going through some maintenance due to a significant increase in customer and trading volume. Are they planning a major stabilization upgrade? What is going on under the hood? And this is the official statement out of SBI. In order to accommodate a significant increase in customer trading volume, we are planning a major system upgrade aimed at stabilizing our system. As part of this, we'll be conducting extended maintenance, and that's what I'm reporting on this morning, guys. Now, I do want to hear from the live chat. Do you believe this is going to impact XRP? One's in chat for yes, two's in chat for no, because I do have some news that's definitively going to impact XRP. That is, Japan is going to recognize XRP as a regulated financial asset starting in Q2 2026. What's really going on here? Japan is set to classify XRP as a regulated financial product under the Financial Instruments and Exchange Act. Now, they're targeting this for Q2 2026, and that would put this on par with what happened in the UAE. Now, a lot of our listeners who listen every day, they remember the news that we got out of the UAE just a couple of months ago, where Ripple declared that XRP for the first time was considered a regulated financial instrument in the UAE. What does this mean? Hedge funds, political partners, major institutions can all use XRP because they have clear rules of the road, they have clear guidelines, and they know how to pay their taxes. Well, the same thing is happening here in Japan, as this is shifting XRP from a crypto asset to full investment status. So what does it mean? Clearer rules, stronger protections, and major institutional doors are swinging open. Concurrently, the nation is leveraging the XRP ledger as a foundation for the emerging tokenization of real-world assets. These are the catalysts that are going to drive more volume into the XRP ledger. But I want to hear again from you guys. One's in chat if you're excited that Japan will be recognizing XRP as a regulated financial asset. Two's in chat if you think this will not occur. Now, one thing we know about Japan, they aren't like the United States. They aren't shutting down every 90 days. And I think a lot of people are scared that the US government may end up shutting down once again, which would put the Clarity Act on ice. So we're going to talk about that. I do want to address this live donation as well. Can't pronounce the username, but I do want to give a major thank you for the $5. Is the SBI upgrade the same 3.0 David Schwartz did last night? I'm not entirely sure, guys. I'm going to have to check out what you're stating on the David Schwartz front because I wasn't privy to some of that content. But I did want to kick off today's episode once again, diving into what's happening in Japan and how this could impact the price of XRP. If you guys are enjoying this content, smash that like button, subscribe to the channel, and I want to give a shout out to the 2,200 people who are watching this program live, probably snowed in and enjoying the snow day. So shout out to you. Hopefully you're enjoying your day off. Let's break down what's happening in Japan and what this could mean for XRP.
Carry trade unwinds, people are going to sell whatever they can to move toward the safest thing in their mind, which is likely going to be Japanese bonds in this situation. That means that U.S. treasuries are going to get sold off to the tune of $1.6 trillion that's held by Japan and potentially the other parties in the BRICS nation that still hold U.S. debt, around $2.3 trillion totally. When that many treasuries hit the market at once, prices fall, yields rise, liquidity dries up. And this is dangerous because treasuries are the backbone for banks, pensions, institutions, money markets, stablecoins, everything. If the U.S. defaults on their treasury obligations, the whole game is over. And right now, it's designated as a tier 1 asset by the BIS. The U.S. has defaulted twice in its history. But in this situation, I think they're going to be able to make good on everything. Stablecoin regulation, which was passed in 2025, is going to be the key here. We're going to see stablecoins not just as a crypto tool, but the major banks are going to use them to be able to stabilize the treasury market.
And there you have it, guys. So when you're thinking about why the RLUSD token is important for XRP, focus on the stablecoin providing this global liquidity where all of these different tokenization products, meaning bonds, debt, issued assets that are not liquid, they're all becoming liquid. And this is all facilitated through the tokenization of real world assets. That starts with RLUSD. We need this liquidity where to be liquidity layer. That's a mouthful, to be ubiquitous globally so that all of these different countries are tapping into one blockchain and sourcing that liquidity from the same space. Now, Jake is stating that the catalyst here will be a spike in oil and a recall on the debt in Japan. If those two things occur and the XRP ledger is chosen, of course the token would increase in value. But the big catalyst will be, is the XRP ledger chosen as that liquidity layer? Now, I'm going to come back to this because I want to pause for just a moment and connect another topic here. What do we know that's happening for sure? Well, retail investors are tapping out, guys. And we've seen this before. I was here during the FTX collapse back in 2023. Sorry, that was 2022, where every retail investor was being sold that this market was going to pump. FTX collapsed and we headed into ranges that we never thought we would. We saw $15,000 or $16,000 Bitcoin. We saw a 30 cent XRP. We saw Ethereum crash below $1,000 once again. And that is the type of sentiment that's in the crypto market today. Thousands of new investors are entering the space and they're like, why is anybody even invested in crypto? This is a market that trades down and sideways. Let me remind you all that it was just 15 months ago where we saw assets like XRP do 400% gains in only 25 days after the election of Donald Trump. That major momentum, because crypto moves so quickly, has been forgotten. It's been cast into the background. There's people out there who don't even appreciate the fact that $1.85 for the majority of XRP community, that is hundreds of percent in profit. But to the people who got here in 2022, 2024, 2025 even, they're sitting there and they're wondering, when does this space get exciting? Well, that's where I defer to some of the thoughts here from Binance's co-founder, because he's focused on the same things that we are. It's the liquidity crisis that will determine the price of crypto assets. It's not going to be the 4-year cycle. And I'll double down on this. We are not in a bear market. Here's his thoughts.
Do you have any thought, though, real quick, on just like the price of Bitcoin and where this is all headed? Do you think we're in a winter, a summer cycle? Are you with Kathy Wood, who thinks it's going to turn into $1 million a coin?
So whenever people ask that question, I always got to ask them, what's the time frame you're looking at? If you're looking at today, tomorrow, on a daily basis, there's no way I can predict. If you look at a 10-year horizon, it's very easy to predict. We're going to go up. If you look at a 1-year horizon, which is like what the most of the common framework is, 2026, I'm not sure. You may be, I think I have very strong feelings that it will probably be a super cycle.
Be a super cycle?
2026, yeah.
For Bitcoin?
For Bitcoin.
And what super cycle to you means what?
Well, normally Bitcoin follows 4-year cycles historically. If you look at historic data, like every 4 years, there's a all-time high and then there's a drop. But I think this year, given the US being so pro-crypto and every other country is kind of following, I do think we will see this. We will probably break the 4-year cycle, yeah.
And what does he mean by break the 4-year cycle? He thinks Bitcoin is going to head to a brand new all-time high above 126,000 in the calendar year of 2026, guys. I want to hear from you all. One's in chat if you believe Bitcoin will create a brand new all-time high this calendar year. Two's in chat if you think we're not going to create a new all-time high. 2026 is shaping up to be a bear market. Now, I want to point out one of these comments here because I think it was a great one. This guy said, I appreciate your eternal optimism. It's funny to see. Well, here's why I have the optimistic take. I was here in 2020, 21, 22, 23, 24, 25, and I'm here in 2026. One thing that I've consistently learned doing content every single day is that retail investors get it wrong. That's the unfortunate truth. And when you listen to retail investors, the millions of people all across social media invested in crypto, everyone is calling for a bear market. The average investor is sitting on the sidelines, investing in gold, investing in the S&P. I've got friends who were in this market since 2019. They sold 100% of their crypto. They put it all in Amazon and Apple. And what's the logic behind that? This has been a stagnant market. Assets like Amazon, assets like Apple, they had 20, 30, even 35% returns in 2025, while the crypto market or an asset like XRP traded down and sideways. But what's the great opportunity that people are forgetting is that when this market moves, it moves far higher than the retail investor thinks. So think about it this way. If we're looking at a market where Amazon is doing 35% per year, and we're anticipating we do something similar, that's 70% every 2 years. Well, we just watched XRP do 400% in a single month. And that is why, and I'm talking about the November pump back in 2024, that is why people are in this asset class. We're not here for those 20%, 30% returns. We're here for a real opportunity for people to make huge amounts of income on the back end once we head into market euphoria. And it's only the patient and educated investors that are going to have the persistence to not sell the asset, not move on, and not capitulate in this market. I do want to give a shout out to this person. The Shitcoin Millionaire is what this person's name is. Thank you for the $10.90 or the $9.99. They stated, Abs, longtime listener, first time out on the East Coast working in these storms. Thank you for all that you do. I like the guy who said earlier, go Seahawks. Now, listen, thank you for the $10. We do not appreciate the positive Seahawks comments. We are Patriots fans only over here, my friend. But shout out to you. Thank you so much. And again, somebody said, this is a funny comment. Please shorten your good morning. It's irritating. Listen, that's my staple, guys. I got to stick with what got me here, right? You leave the dance with the person who brought you there. That's a great Mike Tyson quote. I'm going to stick to my good morning intro because I love that thing. And we do already have 3,000 live listeners. I want to hear from you guys. One's in chat if you're bullish. Two's in chat if you're bearish. I agree with what this listener had to say in chat. No more 4-year cycles. The market is not going to be this easy, predictable market where retail investors can take profits every 4 years, sell those assets, buy them at lower prices, and ride it back up to euphoria. I think what's happening here is we are witnessing a changing of the guard. We are going to see the biggest companies in the world buy these assets and change the way this market functions. And I think the ETFs are a great example of that. And, you know, I think everybody in our live chat, or at least thousands of people out there who watch this channel, you guys see the same vision that I'm seeing, which is retail's tapping out, institutions are tapping in. And yeah, maybe we have to wait 3 months or 6 months to get some positive momentum here. But there is so much momentum behind the crypto space right now. Thank you, Love Stocks. Love Stocks said, don't listen to that guy, Abs. I like the good morning, right? Listen, here's what I'm going to do. I'm going to defer to the people like I always do. One's in chat if you want the good morning at the beginning of the show. Two's in chat if you want something different. Now, I'm going to defer to the live chat like I always do. But let's continue with the content that I had prepared. So it's not just me thinking the 4-year cycle is over. Here's what Kathy Wood had to say. She just filed, by the way, this is very important, for the first crypto index ETF. This is 20% XRP. So it's 35% Bitcoin, 21% Ethereum, and then 19.9% XRP. This is somebody who behind the scenes knows what's coming. Let's listen to the clip and then we'll break it down.
I know there's a lot of fear about the 4-year cycle. We didn't have much of an upcycle by Bitcoin standards. So we think we're pretty well through the down cycle here. We may test in this 80 to 90,000 range on Bitcoin, but we do think that the test will be successful. It will be the shallowest 4-year cycle decline in Bitcoin short history, and then we're off again. We think this is 3 revolutions in one: a global monetary system, rules-based, competing against fiat currency, to be sure. It is a technology revolution, and it is the leader of a new asset class. I know there's a lot of fear.
There you have it, guys. And I do want to give a big thank you and shout out to the live chat. You guys are the best community in all of crypto. We did already pass over 400. I'll give you the live like counter. 444 likes on today's episode. Great number, 3 4s in a row. If you're enjoying today's content, smash that like button, subscribe to the channel. And this person, you got the winning comment here. They said, your good morning is like Robin Williams in Good Morning Vietnam video. Love it. Now, what's funny about that, and I will get right back to the content, guys, is that when I originally started the show in 2022, there was somebody who used to show up every single day and talk about how, hey, you stole that from Robin Williams. You're not allowed to say good morning. Now, where is that person now? They have faded into the abyss, but the good morning has resided. It stands, my friend. So with that being said, I'm going to put the jokes to the sideline. I'm going to get back into the serious content, and we're going to start talking about the Crypto Clarity Act as well as Jake's domino theory, because these two ideas play perfectly into one another. This is the Senate Banking Committee's chairman, French Hill, telling us why crypto regulation will get passed. Here's his response.
Where do we stand today with this?
Well, Cheryl, it's great to be with you. This is really an important priority, not only for President Trump, but for Republicans here in the House, where we've worked for 4 years on market structure legislation, and we've passed it twice. We passed it in the last Congress, my bill called Fit 21, and then this Congress, just last July, we passed the Clarity Act, which is what the Senate is debating. And the Clarity Act got 78 Democratic votes here in the House. We lay out the strict rules for market structure on how to treat a digital asset as a commodity or as a security, how you store it, how you can custody it, how it can be used for collateral, how banks will interact with digital assets. So it's a very important bill. You cannot pass a bill just for dollar-backed stable coins like the Genius Act that President Trump signed into law last year without market structure. It's like passing a bill authorizing cell phones, but there's no cell towers. So this bill is very important. I agree with the president that I hope he can sign it soon. We're working with senators to get this text in good shape, listening to their ideas, their concerns, their changes they'd like to make, so that we can get a bill that the digital asset community and the traditional finance community can both support and get this on the president's desk.
Well, guys, if you're joining today's show, I'm seeing we got thousands of new listeners flooding into the show, both on YouTube and on X. The title for today's episode is the XRP Ledger Validator just went down. Right now, we're breaking down the Clarity Act, but I did share this update earlier. I want to provide it for our listeners who are just tuning into the episode. It seems like Ripple partner SBI is going through a maintenance upgrade due to a significant increase in customer trading volume. Now, they're planning major stabilization with this upgrade. What's going on underneath the hood? Here's what SBI said. In order to accommodate a significant increase in customer trading volume, we are planning a major system upgrade aimed at stabilizing our system. As part of this, we'll be conducting extended maintenance. And obviously, the XRP Ledger Validator going down is a major part of this maintenance. Now, I'm tying this into the news that Japan is set to regulate XRP as a regulated financial asset. So we have the largest bank in Japan and SBI going through maintenance upgrades, while XRP Ledger is shifting from a crypto asset into a full investment status here inside Japan. This is going to provide clearer rules, stronger protections, and major institutional doors swinging open. And that's why I wanted to start off with Jake's analysis of kind of what's happening here with stablecoins. Now, he goes into the risk of depegging with going into the risk of depegging with Tether. I'm going to skip that portion. I want to get into the forced selling of Bitcoin through ETFs and the institutional panic, because what Jake is highlighting here is that we could see a great fall for the value of Bitcoin, leading to a great increase in the value of altcoins. Here's the clip.
These other treasury companies and Bitcoin ETFs will become forced sellers. In panic, institutions will sell what's easiest, and that means ETFs. Investors will be redeeming shares, authorized participants will be selling the underlying asset, Bitcoin will hit the market, price will drop, and more redemptions will follow. It will be a negative feedback loop that continues to force selling on Bitcoin. I think we could see a $20,000 Bitcoin when all of this plays out. And XRP will be the solution that
Let me just say, I disagree with that, by the way. I don't think we're seeing a $20,000 Bitcoin.
saves this and keeps Bitcoin around over the long term. That also means Bitcoin ends up on the XRPL. So let's talk about the stock market. The settlement is going to be a problem. They have these ETFs, they have this exposure. Bitcoin settles close to real time. The market still settles T+1. That happened on May 28th of 2024 with the option to settle T+0 using a digital asset. And they have trialed this and finalized that project in 2022, August of that year with Project Ion. R3 and the DTCC built a system to be able to settle and reconcile the back-end trades on the stock market from the exchanges to the clearinghouses. And this just so happened to be what the president of NASDAQ was talking about with Monica Long in 2025 at Swell.
So remember this, guys, because I'm going to play the actual clip here. We had the CEO for the New York Stock Exchange come out earlier. I think it was last week, about 4 days ago. She was sitting there on Fox Business live from Davos. And what did she say? The New York Stock Exchange president confirms infrastructure for tokenized equities, 24/7 trading, fractional shares, and blockchain-based instant settlement. This is big for XRP. That's what this user said. Tokenizing markets need fast, neutral 24/7 settlement rails. That's where XRP fits in. So here's the statements that everybody should be aware of.
So what we announced this Monday was that we've developed the infrastructure which allows for the tokenization of equity markets. And it brings in all of the positive aspects of a tokenized environment. 24/7 trading, digital settlement, immediate settlement, and writing to a blockchain, as well as what's needed in the equities markets, including fractional shares, trading in notionals, the demand that we've heard from customers.
This is a big deal.
It is.
Yeah,
it is.
This is a big deal to go to a tokenized platform. Do you think every market will eventually be tokenized?
I think aspects of the technology are going to seep into every market. So what we announced this.
Well, there you have it, guys. And this is one of the reasons I am so confident we're going to get digital asset regulation, because companies like the New York Stock Exchange, for example, wouldn't be building these products, perfecting them in the background, have them ready to roll out, and then say, you know what, let's roll out these products without any rules or guidelines. It's just not going to happen. So there's two ends of the market that we're really looking at. A market where it's regulated, real world products are turned on, and we see the XRP ledger, we see HBAR, we see Stellar, we see Chainlink, all these different blockchain protocols be utilized. And then we have the other situation where they stall the digital asset regulation. They aren't allowed to roll out these products, and we're stuck in crypto purgatory until the end of the Trump administration. It's a reality. And so what's great about that is with maximum uncertainty, oftentimes comes maximum opportunity. And we're looking at a crypto space right now where a lot of people are tapping out, and there's so much uncertainty in the air that if us bulls are proven correct, the opportunities here to make a ton of money. Let's hear the back end of this with Jake here.
Interviewed, and she stated that the first place that they're going to be implementing distributed ledger technology is going to be for the back-end settlement reconciliation of the stock market. And if trades can't settle, counterparty risk explodes and margin systems will fail. So they will have to move to something that has instant settlement. And the only way that is going to be possible with XRP or any other asset is if there's enough liquidity in that asset. You need instant settlement, you need no counterparty risk, you need no pre-funding, and you need global movement of that value. It's not speculation, it is the infrastructure that we're going to move to when all this plays out. In 2025, we did see the launch of the XRP ETFs. The majority of the volume to date for those, we saw a strong rise in XRP in late 2024 and throughout 2025. It continued to, trend sideways somewhere between $2 and $3 for the majority of the year. That's sustained volume from these institutions buying XRP, using TWAP or VWAP to be able to average into the market with large buys. And if they are issuing larger orders or don't want that to impact the market, they will go through the OTC desk or the dark pools. Unfortunately, there's only so much available supply for XRP on the market. Institutions, Ripple, other enterprises, and retail are holding XRP and not selling it. And because of that, the available supply becomes less and less every single day that these ETFs continue to eat it up off the market. At some point, the OTC desk and dark pools will be out for available supply there, and the volume will have to move to the exchanges. I believe that we're going to see BlackRock issue an ETF when the time is right in order to be able to save this system. They will have to move to instant settlement on the back end of the stock market, but they need enough liquidity in XRP to do that. And the only way to get the price to the levels it needs to be is huge amount of demand all at one time. You're going to have the FX market impacted. You're going to have the the stock market impacted, you're going to have Bitcoin impacted, you're going to have the exchanges impacted, and the volume and demand from these ETFs and those buyers. With not much available supply for XRP, if you took economics in high school, you understand supply and demand dynamics. The supply for XRP is going to be, I think less than 1 billion. That's my best guess based on conversations and things that I'm seeing. It could be more, it could be less. But that's what I think we're at, here in the beginning of 2026, left on the OTC desk, dark pools, and the exchanges. It really could be even as little as 100 million XRP, but there's no way that you can look at the on-chain analytics and be able to discern that. You're going to have to talk to every single exchange, OTC desk, and dark pool and get verified numbers if you really wanted the correct amount, because the on-chain analytics just show you what's sitting in a wallet. It doesn't show you the overlying accounting mechanism across all these parties.
So let me just add a little bit of context here, guys. One of the things that we've been talking about is how the ETF issuers are buying up large amounts of XRP, and then they're moving that XRP into the hands of long-term investors. Well, I think one of the things that pretty much everybody got wrong is that when these ETF issuers purchase the XRP token, they're not sourcing it from a Coinbase or Kraken or Uphold and driving up the price of XRP, but instead they're going behind the scenes to these OTC desk issuers and they're getting large amounts of XRP. Let's use hypothetical numbers, just say $10 million. That's the minimum that they need to write a check. Well, they're buying $10 million worth of XRP. They're doing it OTC desks. None of that demand hits exchanges, and none of that new value is calculated into the existing value of the XRP price. So the price of digital assets is extremely nuanced, and I don't want to make our listeners overly confused with this, but here's the truth of the situation. When you look at the value of a digital asset, it's not XRP is 180 billion in market cap, and that means $180 billion came into the project. It's actually very different from that. The way that the market cap value is calculated is that you have the exchange rate trading on Coinbase and Kraken and all the BitTrue and all these different exchanges. That's one value of XRP. And let's say that's trading at $2. You then have the OTC value, which is probably just a cent or two lower, but these big companies are able to come in and buy $10 million, $20 million worth of XRP without impacting the price. So that's why I find it to be very valuable that our listeners have that understanding. It's not like if BlackRock decides tomorrow, we're going to buy 100 million worth of XRP, they're going to go to Coinbase and drive this asset up to $10. No, they're going to go to these OTC desks. They're going to buy 10 million, 20 million, even $100 million. And you won't even see that movement on the price chart. It's a frustrating reality, but the back end of it is where it benefits XRP investors. And that's what Jake was saying. As thousands of people are buying XRP, even from these OTC desks, eventually they're going to run into a diminishing supply. As they run out of supply, they're going to increase the price of that XRP because it's a simple supply and demand equation. And at the end of the day, we're all waiting for that supply shock moment where we have these ETF issuers, we have these large institutional players buying XRP from the OTC desks. The OTC desks begin to run low, and then we get a dramatic increase in the XRP price chart. Now, I know people are watching the silver chart. I'm doing the same thing, guys. Silver, this is a really interesting price chart that our listeners should be aware of, because this asset, and somebody in our live chat commented on this, so I wanted to kind of draw this to their attention. This is the 1 month chart for silver, and it's absolutely ridiculous. I just can't explain anything logically. That's what this user said. You are looking at 10 years of data here, guys, maybe even more than that, maybe 20 years of data, because it doesn't have the years. This goes all the way back to 2011. So 15 years of data. Gold traded down, traded sideways, could not break out of this $37, $38 range, finally goes up, breaks that. And look at what we've been in. We've been in market euphoria. 9 consecutive months of bullish price action on the silver price chart. That is $1.9 trillion. You're hearing that correctly. $1.9 trillion. That's 10x the market cap of XRP was added to the silver price chart in just the last 30 days. So shout out to you guys. And somebody said, is John Nassif related to abs? He just might be, guys. You have to do your research. We have Walmart abs. That's Mike. We have Costco abs. That is John. But I wanted to kind of point out the connection there to the silver price chart and how people are underestimating what can happen with XRP. We saw $1.9 trillion added to the silver asset in 25 days. You're telling me XRP can't do a 2-3x in a couple of months? I completely disagree. But we're 34 minutes into today's show, guys. We got nearly 1,800 people watching on YouTube, 4,400 watching overall. If you're excited or you're enjoying this content, smash that like button. And the goal for today, can we pass 700 likes? If we pass 700 likes, we are going to do some overtime on today's show. Now, this person said, come on, Abs, it wasn't a breakout. It was a loss of control by the banks who have been suppressing metals for 46 years. Well, this is an argument that me and Johnny kind of had in the background where I said something similar to what that person had said. And Johnny goes, Abs, I've been alive for a long time. And he said, if the banks didn't want silver to be breaking out right in this moment, they'd continue the manipulation. But there is a new global order taking place before our very eyes. And it's not necessarily about the euphoria of gold and silver. It is about the collapse of the US dollar. The US dollar is having its biggest drop in history as we're doing today's show. The US dollar index, the DXY, is down nearly 16% from its 2022 peak, falling to 96.8 today. The last time the dollar fell this much was 2017. Now, remember the bull market of 2017 for crypto? That move came just before a global liquidity surge, and crypto entered a historic bull market. And this evidence, guys, doubles down on the fact that what we're going through right now, this is closer to the 2017 bull market than the 2021 bull market. Someone said, Abs, can I sincerely and genuinely ask why we can't find an expert that can come on the show and explain exactly what's occurring with the dark pools and OTC? There has to be somebody who can speak on this validly. I think Matt Hogan did a great job, and thank you to Atlantic Living for this comment. But we had Matt Hogan, the Bitwise ETF issuer, come on air, and he explained how that works pretty great. I can actually go over that in this episode if you guys would appreciate that. But let me know in chat, what are your thoughts? We're going to continue with this Jake content. Like I said, the rise of gold and silver and the eventual rise for digital assets, this is all about the collapse of the US dollar. It's not about the rapid appreciation of everything else that's valued against the dollar. Now, if you're enjoying the content, I just hit the App Store button on my laptop. I apologize. We're going to keep playing this clip, and then we'll wrap up today's show with some interesting information.
All that said, it really won't take that much volume on XRP. If there's only 100 million XRP left to be traded, you would only need at today's price around $200 million worth of interest or buying pressure on XRP before all of that was gone. And then price would gap up to where people were starting to sell on their XRP onto the market to be able to meet that demand. And if there's an insatiable appetite, price will gap significantly higher than people anticipate. And that is where people will be willing to sell their XRP, and enough will come onto the market to be able to meet that demand. And that'll be the new price on the market for XRP, which will also allow the back-end settlement of these systems. The FX market will then be able to use it as a liquidity buffer as all of that yen flows back in to the Bank of Japan, or those other currencies swap back to yen to be able to repay those loans. There's going to need to be something there that's a decentralized exchange between those currencies at scale. Otherwise, the FX market's going to lock up. Same thing on these exchanges. If Tether depegs because of the reverse carry trade unwinding, there's not going to be enough liquidity for them to settle between all of these currencies. They are also going to need a DEX or a bridge asset to be able to settle those pairs. You've also got the back-end settlement of the stock market. You need something between the clearinghouses and the brokers to be able to de-risk from those Bitcoin positions and the other stock positions real time for these investment banks to mitigate those losses. And ideally, they're holding XRP on their balance sheet that allows them to rebalance their assets and liabilities. And again, a lot of this is speculation, but at the end of the day, I don't see another option out there that fixes all of these gaps that are going to occur in the market. XRP is designed to move value instantly, bridge currencies, and reduce settlement risk. Japan's going to face the FX volatility as capital rushes back across the borders. XRP could act as that buffer, not a reserve.
So guys, I do want to play this clip for you all. This is Matt Hogan on our channel talking about how the ETF issuers, all that demand does end up hitting the open market. I'm going to play this clip and then we'll break it down because it correlates to what Jake just had to say.
Absolutely. All the time. No, it's a great question. So we do all of our buying OTC. The way it works is if we get, let's say, $100 million into our ETF, we go out to 7 major institutional market makers, Jane Street, Susquehanna, Goldman Sachs, Macquarie Bank, the big guys. And we say, give us your best price on $100 million XRP. And they'll all come back with prices, and then we'll call them up and say, Jane is 3 cents wide. Can you do 2 cents wide? And we'll drive the price down as low as we can. We'll put them in, and then we'll execute. Now, what happens behind the scene is that, let's say Jane wins the bid. Absolutely. That question all the time. No, it's a great question. So we do all of our buying OTC.
So I think that was a great explanation, guys, of what really happens with these OTC issuers, because again, this is a frequently asked question. Matt Hogan of Bitwise explains how his company purchased cryptos. The purchase are done via OTC. This is to prevent huge swings in the price and to essentially get them a better deal on large purchases. But once Bitwise selects its market maker, it will go into the market and buy the XRP off the exchanges. So they're the ones that are in the market buying the XRP, and then they take that XRP and they send it to Bitwise custodian. Now, he said, "Good evening, crypto" here. This guy should have tagged me in the post, my friend. Crypto's RS. I actually got to meet him at the Bitcoin conference last year, so I'm really looking forward to that. I am going to be attending ETH Denver, guys. I have some big plans in the works for some of the crypto conferences we're going to be attending. I will be at ETH Denver, I think, February 19th. I'm going to be attending an event with Ray Fuentes as well, so I'm really looking forward to that. If you guys enjoyed this content, smash that like button. I'm going to check the live like counter. If we pass 700 likes, we're going to rock and roll into some overtime for today's episode. We are at 688 likes for the show. So shout out to you guys, the best community in all of crypto. Let's play these last couple of seconds now that we have an understanding of kind of how the OTC buying works.
During this crisis, OTC liquidity is going to disappear. Dark pools are going to dry up and the trading is going to move on to the exchanges. If demand spikes and supply is thin, price becomes the clearing mechanism. And realistically, XRP is going to have to be somewhere between 3 and 4 digits in order to be able to facilitate the liquidity requirements necessary in this situation. In closing, hopefully you have a better grasp and understanding of what all this means. We are at a point in history where the entire infrastructure for the financial system is about to shift. When I say this is a once-in-a-lifetime opportunity, I don't mean that lightly. People will tell you, oh, there's a bunch of once-in-a-lifetime opportunities. This literally will not happen again for the next 2, 3, 500 years. This levels the playing field for all of the sovereign nations out there in order to be able to compete, settle real time without counterparty risk. There will be no one reserve currency on the other side of this. XRP will sit as a decentralized, neutral bridge asset in between all of those sovereign currencies to be able to settle them real time, where everybody runs a node on the network and they can trust the network. They don't have to trust one another. This has been being built in the background for 20 plus years, culminating to this point in time where it's going to be used in this crisis reaction solution type situation. You've heard many politicians say, never let a good crisis go to waste. This is that situation that's going to be playing out. So again, this is not financial advice. You should do your own research, verify everything that I'm saying. I'm just some crazy guy on the internet.
And that's me too, guys. Just a crazy guy on the internet who loves making crypto content. And thankfully, we've got 4,700 people who want to discuss the same topics that we do on this channel. Now, let me just say this. I don't think anybody should really be focused on the price of the asset as opposed to the catalyst, because some of these dramatic price targets, people get hooked on the idea that they're going to make $100 million in the next 90 days. It's not the best way to kind of approach investing in digital assets. What I would say is that we understand we are going through a once-in-a-lifetime global political change where the United States will not be the global superpower when it's all said and done. We don't know how long it's going to take. Maybe it takes 5 years. Maybe it takes a year. Maybe it takes 10 years. But it's undeniable that there is a collapse in the use of the US dollar, the petrodollar also collapsing before our very eyes. And simultaneously, there's no other global powerhouse that's going to, it's not like China's on the rise and the United States is on the downtrend and China is going to become the next global superpower. No, instead, we're moving to these blockchains where there is not a single global superpower. And instead, it's a democratized approach to the financial system. We've never seen this before in world history. I think Jake said it best. We're not going to see it again for another few hundred years. And that's why us as crypto investors, we can't be arrogant in the sense that we think we have it all figured out and we're going to make a ton of money and that's the end of the game here. No, I think we have to be more humble in our approach. I think we have to say this global economic restructuring is occurring and we're just regular people. I know the thousands of people out there, maybe there's some multimillionaires in chat. Maybe there's some people who are playing a different game than us. But I think for the thousands of people who generally watch this program, they're just like me. They're middle-class Americans looking for that solution to become upper-class Americans. And they found themselves in the digital asset space, just like the baby boomers found themselves in the housing market. If you bought a house back in 1960, you didn't have to do anything. You just held the asset for 50 years. You became a millionaire. That is the same concept that I'm applying to the crypto space. Now, nobody wants to wait 50 years. Maybe we only have to wait 10 years. Maybe we only have to wait 5 years, depending on how large your portfolio is. But the same idea applies. We positioned ourselves in an emerging market before the biggest money enters the space. And now our listeners, our community, the individuals who are here early, you are the ones who get to profit off that. You get to set yourself and your families up for success. That's why I'm such an advocate for the crypto space. It's not the Bitcoin chart. I'm not some Bitcoin maximalist. I'm not even some XRP maximalist. I am a crypto maximalist. I think that crypto is going to reshape the geopolitical order. It's going to play a major role in the downfall of the US dollar. And then the United States is going to come in, regulate the industry, prop up some of these blockchains, focus on American products. And just like that, we're rich, baby. That's pretty much all I can say. But I do want to play this other clip. Hopefully I'm correct. I'm being a little lighthearted there, guys. But I do want to play this other clip here. This is from Coinbase CEO Brian Armstrong. Says Joe Biden wouldn't talk to him. Donald Trump wants fair crypto regulation to make the United States the crypto capital of the world. Here's what Brian Armstrong had to say in Davos.
He understands also it's an important political issue. There's a huge base of, there's like 52 million Americans who've used crypto now.
Right.
And they want to see clear rules. They want to see this, get better financial services in the United States.
I was thinking.
So we're going to play this clip. Somebody said, are we still considered early or is this the peak? That's the question. Forget about sentiment, focus on data. Did you know that there are less people in the crypto market today than there were back in 2021? Retail investors have checked out. So when you say, are we late? We're not late. We are very, very early in this journey. So early that sometimes it may even feel like we're late, but that's the gist of it.
On the way over here, how you've really struggled to work with regulators over the last decade. I remember under the Biden administration, the 46th administration, you went to DC and were like, I'm here. I would love to talk to you. And they were like, yeah, we don't want to talk to you. Now, some people might have varying feelings about Donald J. Trump, our 47th president. But one thing he has nailed is interfacing with the business community and taking regulation and creating a legal path for crypto specifically very seriously. How's the last year? How have things changed for you in the last year?
Yeah, well, I know you like to call balls and strikes. And I think just looking at it objectively, the Biden administration really tried to unlawfully kill this industry in America, from my point of view. And Donald J. Trump, you got to give him credit. I mean, he campaigned on this idea of making the United States the crypto capital of the world. He's kept his promises. He's leaned in and tried to get clear rules and regulations passed so that American companies can thrive, American consumers can earn more money on their money. And he understands also it's an important political issue. There's a huge base of, there's like 52 million Americans who've used crypto now.
Right.
And they want to see clear rules. They want to see this, get better financial services in the United States. It's also, frankly, a global competitiveness issue, right? I mean, China just announced that they're going to pay interest on their central bank digital currency. Some of the largest stablecoin issuers are still offshore. He wants to repatriate that capital and bring it into the US.
There you have it, guys. We are going through a global restructuring here. And Donald Trump, he's not making this pro-crypto narrative because he's some big advocate for digital assets. No, he's doing this pro-crypto narrative because he understands the US dollar is collapsing before our very eyes. And if we don't restructure ourselves, the world is going to catch up to the United States. Maybe not from a military standpoint, but from a US dollar dominant standpoint, it is a scary time to be in the market. We did just pass 5,000 listeners, guys. I'm going to play one more clip for you all. This is Kathy Wood's ARK saying they are in it to win it on Bitcoin. She expects the 4-year cycle to die. And I played this earlier. I'm going to play a different clip once again. Kathy Wood calling for the end of the 4-year cycle.
Bitcoin, you've got a pure play Bitcoin fund.
Sure.
And I'm just interested to know, because we're off the 126,000 high level, you're still in it to win it?
We are in it to win it, absolutely. So ARKB, right, is our spot Bitcoin ETF. And as we assess the ecosystem right now, what we've undergone in the last 2 to 3 months are the reverberations after 10/10. So 10/10, October 10th, was what in the crypto world, I'm not sure if it's mentioned this more broadly, is the flash crash associated with a software glitch on Binance that deleveraged the system, and to the tune of $28 billion. There are a lot of people hurt, and we think that unwind. And often when you go through an unwind, Bitcoin's going to be hit the hardest because it's the most liquid crypto asset. We think that unwind is pretty much behind us. So now the only thing I think investors are worried about, especially institutional investors who understand that they must examine this as a new asset class, the leader in a new asset class, very low correlation with other asset classes. And so they're looking at what's called the 4-year cycle. and we have been down. And the question is the 4-year cycle, the downside of it, over?
Right.
We think it's pretty much pushed through. Maybe we flatten out here in the 80 to 90,000 range base here for a while, but we think we'll be on our way soon.
Pretty great, guys, to hear some of these investors share a similar sentiment that we do. Now, the crowd is not with us. Let me just say it like this. The bulls are not in control. The bears are in control when you look at social media, when you listen to people who are invested in the space. But I wanted to point this out. So Kathy Wood, the woman who we just listened to here, her company, ARK Invest, just filed their S1 with the SEC for the ARK CoinDesk 20 crypto ETF, which has major XRP exposure. This is a landmark step for institutional adoption, but look at the percentages here, the Coinbase 20. They have Bitcoin at 32%, followed by Ethereum at 20%, and then XRP is only 0.8% behind at 19.88%. They also have Solana at 12, Cardano at 2, Chainlink at 1, Bitcoin Cash at 2.5, so on and so forth. You guys can kind of read the list here, but I do find it very interesting that XRP has 20% allocation in this new fund, and that could be a major sign for what's to come, guys. But we already have 5,100 live listeners here. If you enjoyed today's content, show us some love. Smash that like button. Of course, if you're not subscribed, subscribe to the channel. I do want to give a huge shout out and thank you to the old black dad in chat who commented, I find it so funny that everyone describes what Ripple and XRP do, but it's like they're afraid to say Ripple and XRP. P.S. Go Seahawks. My goodness, too many Seattle fans in the crowd, guys. Where are my Patriots fans at? Shout out to Drake May. And a big thank you to you, old black dad in chat. He said, go Hawks. We'll disregard that. But I've often said, and I took this from somebody else in the live chat, XRP was like Voldemort. It was the name that shall not be spoken by some of these large companies. Now we got companies investing in it, talking about it. And it's undeniable, guys. XRP is not in the same era that we were just a few months ago. I also want to make sure I got to this donation. I don't know if I read this earlier, but I'll read it again. Seven Dennis said, no smart contract equals not a security in Japan for XRP. So yes, absolutely. And I'm excited, guys. I think there's a lot of reason to be optimistic on crypto. And that's why I encourage all of our listeners, don't tap out yet. Stay invested in this market and double down on the assets that you understand. If you really want to protect yourself, set yourself up for success, click on the link below. You can check out the Roth IRA product through ITrust, which is going to allow you to compound your gains tax-free. You're hearing that correctly. Tax-free crypto gains in your Roth IRA. And if you click on the link below of this video, you're going to get a $100 sign-up bonus just for using our promotion. So check it out, guys. They also have a PCA account, which is a primary custodian account, which allows for institutional custody, meaning a lot of people are worried about security, and they're very smart to be worried about security. If you're worried about security, the best thing you can do, get yourself institutional custody by clicking on the ITrust Capital link below. Click on the link below, check out their website, look at all of their products. Not like if you click on it, you pay for anything. Go through what they offer and see if it applies to you, because my belief is there's hundreds, if not thousands of people who watch this channel that would be very excited about tax-free crypto gains and institutional custody for many of their digital assets. But we have 5,200 live listeners, over 1,600 watching on YouTube. If you enjoyed today's content, smash that like button, subscribe to the channel. We already passed 840 likes. So I'm going to just remind you all once again, you guys, ladies and gentlemen, you are the best community in all of crypto. So we love you guys. We appreciate you all. Go out, touch some grass, hug some family, and we'll see you all in the next one.
You're going to be so proud of your president, and I don't care about that. But you are going to be so proud of your...
I meant to say, touch some grass and hug some family. I hope I said that correctly at the end. I need to correct myself, but we love you guys, and we'll see you in the next one.
You're going to be so proud of your president, and I don't care about that. But you are going to be so proud of your country, because we're going to turn it around, and we're going to start winning again. We're going to win so much. We're going to win at every level. We're going to win economically. We're going to win with the economy. We're going to win with military. We're going to win with healthcare and for our veterans. We're going to win with every single facet. We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more.
So if you're looking to implement the same strategies that we do here on Good Evening Crypto, I would encourage all of our listeners to click on the Merlin link below and sign up for ITrust Capital as well. Now, why are our listeners going to do this? By leveraging the Merlin application, you can create a profit plan for yourself so you know exactly where you're going to be exiting this market. But leveraging ITrust through a Roth IRA product, you can take advantage of tax-free crypto gains during this crypto bull market. So I would encourage everybody, click on the link down below, sign up for ITrust today, and take advantage of our $100 free sign-up bonus.
Well, you don't know much about crypto. You know nothing about nothing. You fake news.
But the challenge, as you know well, is the U.S. has had this very